Today's content is brought to you by Gray Fox Collective. Gray Fox is a collective of individuals that are driven to serve their communities by creating clarity from chaos, by providing sound and consistent support via bookkeeping, accounting, and CFO advisory services. We have two talented and experienced professionals that will be delivering today's material. First, I'm excited to introduce Brett Moore. Brett has a background heavy in both finance and in advising small businesses, and comes from a family of entrepreneurs. He started his career as a CPA, working his way up to CFO, and has also coached business owners via EOS, the Entrepreneurial Operating System. You'll actually hear some EOS terms today, and we'll try to call those out. Brett is currently the CEO and visionary, that's an EOS term, of Gray Fox Collective. We also have Jackie Cusper. Jackie has made a career out of serving her clients. Her master's in accounting has tethered her public accounting experience, allowing her to assist entrepreneurs with cleaning up books, implement new software, build new processes, ensure sound financial decision-making, and more. She has an upbeat and bubbly personality, which can be rare in accountants. With that, I'm going to go ahead and hand off to Brett to get us started.
Thank you, Steve. Before we jump in here, just want to say I'm excited for everyone who's attending live with us today and everybody who's going to get a chance to listen to this later on. Good on you guys for taking some time to focus in on a really important part of your business, making sure that you are prepared for year end, for taxes, everything related to accounting and finance, and really getting prepped for 2025. So I'm going to go through an agenda here and give you an overview of what you can expect for today. So first thing we're going to talk through is strategic planning for the new year. You really want to take this time to focus on what is coming in 2025. All too often, businesses get into the new year, haven't even considered what the plan is. So we're going to start that today. Second, year-end budgeting and forecasting, a big part of strategic planning. And then I'm going to pass things over to Jackie, who's going to talk through 1099 compliance requirements, beneficial ownership interest compliance, and then also take us through a year-end close checklist. So we get you guys a tool so that you can be on top of the things that you need to be focusing on. Lastly, we're going to spend a little bit of time at the end. We'll always want to leave about 10 minutes to talk through any Q&A that you guys might have. So throughout this time, if you have questions that are coming up, please just drop those into the chat. Steve is going to be picking those up and we'll push those over to Jackie and myself so that we can hopefully get you some answers. If there are some that we can't give answers to today, you will be receiving communication after this and we will try to provide some solutions there for you as well. So let's dive in. I want to talk through objectives first. At Gray Fox, we are an objectives-based company, which means if you're going to be spending time with us today, 45 minutes of your valuable day, we want to make sure that we're very clear in what it is we're trying to deliver during this time. We want to ensure that this is an efficient and effective use of your time. So these are the things we're going to focus on. First, we want to provide you with tools for financial preparedness. This is not intended to just be us talking at you, but at the end of this, we want to make sure that you have some tangible tools that you can take into your business, utilize these and leverage these to get you prepared for the end of the year. Number two is to discuss new compliance considerations. There are existing considerations as well as some new ones. We want to bring those forward to you guys so that you know what's kind of behind the curtain that maybe you didn't know about. And number three, get you thinking about the coming year. I already said this once, but all too often we work with companies who have started into the year who have not thought about the plan. What is coming in 2025? How do I prepare for that? So a big part of today is to reframe your mindset and start thinking longer term. Start thinking about what's coming in 2025 and begin to get prepared for that. Before we dive in, I want to answer this question. Why do year-end financial tasks matter? There are dozens of reasons for this, but we've got three that we want to focus in on. First, they matter because of accurate financial positioning. That's what's going to set you up to be able to prepare for 2025. You have to have accurate financial positioning for number two, to be able to make informed decisions. Now is the time of year where you're building out budgets, building out projections, you're planning on new hiring, new products, new markets. In order to have informed decision making, you need to have accurate financial positioning, and the year-end financial preparation matters for that. And lastly, tax preparation and compliance. This is a necessary evil. It's part of running a business or being a business owner. Being prepared for this ensures that you can take the best advantage of credits, deductions, and timing that are out in front of you. If you wait too long, you'll lose those opportunities. All right, so let's get started. First topic I want to talk through today is strategic planning for the new year. I'm going to break this down into 3 parts. The first is setting goals. Now, when we work with companies on strategic planning, it is a very simplified approach. We're not talking about building out a 50-page strategic plan for the coming year. We start high level and we work our way down. So the first is to look out at the 10-year target. This can be whatever. It could be 5 years, 10 years, 30 years. The point is, see this as like your North Star. This is the guiding light, where it is we're going. We're pointing the ship towards your 10-year target. This is going to inform all of the other decisions that we make. So then the second part of this is the 3-year picture. How do you take that 10-year target and make it more tangible, something that is achievable? You can actually paint the picture for it. For us, we start with the numbers. What does it need to look like in 3 years? Your revenue that's required, profitability targets, and then bullet pointing out, painting the picture for what it looks like 3 years from now. End of 2027, where does your company need to be? Why we like to start here is because this informs our 1-year plan. Many businesses head into the new year either with no plan, or their plan is only centered around, what do I need to do in the next 12 months? In order to make the best plan for those 12 months, we need to know the longer term intention for the business. So that's why we start with that 3-year. Once we have these in place, 10-year target, 3-year picture, and a 1-year plan. Now we need to identify KPIs, key performance indicators, or as we would call them, measurables. I want to talk about this in 2 different parts. The first is leading versus lagging. The large majority of KPIs that people are familiar with tend to be what we would call a lagging indicator. This is something that has already happened. You can no longer influence it. It's something like sales for the month was at 100,000. That's already done. We cannot make changes to that. Leading indicators are ones that help us to predict what that outcome is, what is coming. How do we drive the outcome that we want to see? We would call these activity-based. So as we're working towards building out a plan for the 1 year, what are the activity-based measurables, the activities that are going to drive the outcomes that we want to see on a monthly, quarterly, and annual basis to help us achieve those goals? So taking some time to identify the biggest drivers, and this does not need to be a list of 10, 20, 30 numbers. It could be 3 to 7 key measurables that really drive your business. Now we boil this down to the key financial ratios that you need to be looking at. For us, the perfect place to start is looking at a market comparison. It really doesn't matter what your key financial ratio is if you're not comparing it to the market. Taking the time to go and look at, for example, if you are a plumbing company in a small region in the United States and you're generating 1 to 5 million in revenue, what are other plumbing businesses doing in that area? What are their key financial ratios and how do you stack up against that? So we look at basic ratios like profitability, liquidity, and leverage, just kind of the core ratios that are going to give you a general pulse on the business. Then we get more detailed, something like payroll as a percentage. So I happen to be in Bozeman, Montana. Here, cost of living is very high. That means that payroll as a percentage of revenue is going to be considerably higher. It's important that you're benchmarking against the market to understand if you're on par with that. And being under is not always the best thing. That could mean that you're underpaying your people and you're at risk of high turnover and losing some of your key members. So this is a part of your strategic planning for the coming year, is reviewing your financial ratios, comparing it to the market and benchmarking, and making sure you're making the right adjustments. All right, now I want to move into year-end budgeting and forecasting. This is a big part of the strategic planning. It's taking that 1-year plan and building it out financially. What are the metrics? What's the revenue target? What are the expenses that are going to drive the outcome we want to see? So what we're going to do here, I'm going to walk us through a very, very simple approach to building out a budget. There are a lot of companies out there that have never built a budget before, so we don't need to overcomplicate this. We're going to take a very simple approach. First thing to do is review your current year, 2024. If you did not set a budget, that is fine. You can just pull information out of your accounting system, ideally on a month-by-month basis, and do a high-level review of the numbers. We like to review this monthly, looking at trends and patterns that happened throughout the year. This helps us to plan and predict for the coming year. The second part of this is we're going to actually drill into each individual line item. This is the time of year where you're going to test everything. Look at your expenses, see where you could have had cost savings, and use that for planning for the next year. Second part, once we've done this review, now we're going to make adjustments for this coming year. If we can see the trends from a revenue perspective, from a cost perspective, what the expenses we're doing, then we can use that to predict what kind of increase or decrease in costs are we expecting and what kind of revenue do we plan to be driving. Third is to then build this into a cash flow. Most budgets tend to be built around the structure of a P&L, profit and loss. So you have revenue, expenses, and then you have your what's left over, your net profit. However, as many of you know, I'm sure, cash flow does not exactly match your profit all the time. So we need to also build in cash flow projections for the year. If you're a seasonal business, there's a good chance that there are times of the year where you will be cash heavy and other times where you're very cash light. So looking at that now and being prepared for when cash is going to be light will help you know when you need to save or when you may need to be prepared with a line of credit to help you bridge that gap. But if you don't take the time to build out a cash flow projection, this is when you're going to start to have problems. If you were able to attend our previous webinar, we talked about the statistic of how many businesses fail as a result of poor cash flow management. It is a staggering number, and that is solvable by taking the time before the year starts to build out expectations. Last part then is scenario planning. For us, this is if this happens, then what? So we can do our best to build out a budget for what we think is going to happen, but there are changes to the economy, political landscape, to regional changes, weather patterns. There are things that impact your business. So set the budget the best that you can, but then establish different scenarios for likely changes in the year that could come. In front of you should see a snapshot of a budgeting tool. This is something we're going to provide as a resource at the end. This is a very basic tool. You can pull all of your information from your accounting platform. The majority of the businesses we work with are on QuickBooks, and you can drop your information in here. Revenue, cost of goods sold, your various expenses, and use this as your framework for building out what the year is going to look like. And as you can see, there's a 2024 actual planned for 2025, and then a comparison provided at the end. So don't screw with this too much. It is built up to be linked and something that you can use So make sure you're dropping the data in the right spot to be able to properly leverage the tool. So this is a budget. The difference between budget and projections are a budget is static. Once you set it for the year, we don't touch it. Things will change. That is what the projections are for. So start by building your budget, use this tool, drop in all of the numbers to the best of your knowledge, use the prior year information to drive that, then create a copy. Use that copy as your projections. As you go month by month into the year, change those numbers and drop in the actuals and then adjust out to the forecast. If you're anticipating there's going to be changes that were previously unforeseen, you can now change those in your forecast or in your projections, but do not change your budget. Keep it the same. What this allows you to do is get better and better at predicting. You'll get to the end of the year, you can look back and compare your actuals to your budget, and you can see where you were accurate and maybe where you didn't have enough information and you were a little more inaccurate. As you do this year over year, you'll get better and better at budgeting and preparing for your business. All right, I've been talking at you enough, so we're going to take a quick break and do a poll. So Steve, if you could pull that up for us. On a scale of 1 to 10, 10 being absolute confidence, how confident are you that you can reliably use the financial data in your books to make sound strategic decisions?
See the answers rolling in right now. We'll give it just another moment. Please go ahead and answer that question, and we'll go ahead and share the results. All right, we've got just about everybody answer here, so we'll go ahead and end the poll. All right, so we can go ahead and continue. Thanks for giving that feedback. Looks like we've got a mix of answers here for confidence on a scale of 1 to 10 in your books. And of course, that's what we're here to help. We're here to help you get those up to a 10. So with no further ado, we'll go ahead and transition to Jackie here.
Thank you, Steve. I am going to transition to Jackie to move into 1099 compliance requirements. So Jackie, take it away.
Thanks so much, Brett. And one of the biggest topics that clients ask us about during year end is 1099. So let's spend a little time going through the basics and common topics that we're often asked about. First, we'll just talk about the very basics. When are 1099s due? They are due on January 31st of each year. The purpose of 1099s is, well, the IRS uses 1099s to make sure that contractors are reporting their income honestly, just a check and balance there. And in terms of compliance with 1099s and when you need to send a 1099, your business is going to want to send a 1099 if you send checks to contractors of $600 or more in a particular year. Also, you need to send 1099s to anyone that you've had legal or accounting services for. So if you've paid attorneys or CPA firms or anything like that, that's a scenario where you'd want to send a 1099. And then also rent. That's a super common one. If you pay rent to a landlord, then you're going to want to send a 1099 miscellaneous over to your landlord to record that you've paid them rent. Then next, we'll talk a little bit about what happens if you are not in compliance. Well, you aren't in compliance if you are paying somebody that you haven't collected a W-9 from, or if you don't have their Social Security or EIN on file. So that brings you right out of compliance. And you wouldn't want to just decide that you're not going to send 1099s this year. If you do something like that, then we kind of get into that whole intentional disregard penalties, and we really would like to avoid that, of course. If you don't file your 1099s before the deadline of January 31st, then you may get a little letter from good old Uncle Sam, and it could result in IRS audits, penalties, fines, all things that we obviously want to avoid. So how do we avoid the compliance issues? Well, at Gray Fox, we do have a few pro tips for when it comes to your 1099 process, which should really occur all year long, not just in January. We recommend creating a W-9 policy for all vendors in your AP process. So the example would be nobody gets paid unless their W-9 has been collected and recorded in the accounting software. The W-9 is basically used to determine if you need to pay a particular vendor as a 1099. So as an example, you receive a W-9 from a particular business. Maybe they are taxed as a sole proprietor as indicated on the W-9, or maybe they are taxed as a partnership or even an S Corp that's taxed as a partnership. In all of these scenarios, if you paid $600 and more in cash or check to any of those types of entities, you would want to send them a 1099 at your end. And finally, as I mentioned, you always want to update your accounting software to reflect that you have each vendor's 1099 status updated. That will make your life much easier during January. But what if you don't have a 1099 policy in place? What if you plan to do all of this in January? Well, if you don't have a policy in place already, like collecting W-9s for every single vendor that you pay, then there's no time like the present. This type of policy can really be started at any time. But in the meantime, since we are getting close to January and it is fast approaching, if you didn't have a policy in place, you would want to be able to identify those 1099 vendors. And unfortunately, at this point, you would probably need to do that manually, where you have to, pull reports, see who you paid $600 or more to, and then whittle it down from there. And then, of course, you would have to collect any W-9s that you need on the back end, usually in January, which can be tough during the January time crunch. Remember, if you can't get all W-9s on time to send 1099s before January 31st, then you will be out of compliance. So it is very important to get this process started sooner than later. And it's always best to not do it all in January for your own sanity. But what if you need help? What if you need help? What if you need help with 1099 prep or e-filing or determining who your 1099 vendors are? Well, if you need help with any of these things, of course, you can reach out to us. We are very much experts in this area and, would be able to assist from pulling reports, scrubbing 1099 recipient lists, providing lists of vendors where W-9s are needed, and last but not least, actually e-filing before the deadline. All right, so next, beneficial ownership interest compliance. We're going to shift gears just a little bit. I did want to add a slide in this deck to talk a little bit about this brand new requirement that applies to most small and mid-sized businesses. It's the beneficial ownership interest filing. Now, the purpose of this, well, it came out of the Corporate Transparency Act, or the CTA, which went into effect on the 1st of this year, so 2024. This act requires businesses to report their beneficial ownership information report to the Financial Crimes Enforcement Network, which is a bureau of the U.S. Treasury. So basically, they just want to make sure that they want to make it more difficult, essentially, for bad actors to hide behind shell companies. It's a very simple filing. It's very quick and easy. Businesses typically only need to file this once, unless your company's ownership changes. Maybe you add a partner or somebody retires, so on and so forth. That would be the only time you would need to file more than once, but it only takes a few minutes, as I mentioned, and you need to file by the deadline of January 1st, 2025 in order to be compliant. That's very important. You can just go to the link that's referenced on that slide and start your filing. So far, the feedback that I've received is it takes about 5 to 10 minutes. You need your EIN, your business, your general business information, your name, if you know who you are, your driver's license, so on and so forth. Just very basic information will get you there. So we recommend doing that today, sooner than later, definitely before the 1/1/25 deadline. All right, so next, we are going to talk a little bit about year end and the things that you will need to start preparing and getting together in order to have your taxes filed on time, make sure that your auditors are happy, so on and so forth. So we'll just go through the list. Number one, first thing that you're going to want to do is if you are a company that has an annual audit or an audit compilation or an audit review, then you will want to begin working with your auditors now. I'm sure that they have already reached out to you. Definitely make sure to make time for that always, every year, starting in October, November, December, for interim audit reporting. That will definitely help you to get to your deadlines on time in the following year. Number two, you will want to make sure to connect with your tax CPAs as well. Some of them have checklists similar to what we're presenting here. Make sure to ask for your tax checklist from your tax CPA so that you can go through that and make sure to get them as much information as you can as quickly as possible. The more that you do before year end, the more you will thank yourself during crunch time. Number three, all right, trial balances. This is a fun one. Now, if your taxes were prepared in 2023, you'll want to make sure that your 2023 trial balance still matches the trial balance that you used for your tax return. If it does not, you might need to make some modifications in order to restore it to its original glory. If you made changes to prior years after your taxes were done, you probably want to move those changes to be effective as of 1/1/24 instead of in prior years so that your trial balance still ties out and you don't have extra work to do when it's crunch time. All right. So number four, you will want to reconcile your balance sheet accounts. Now, this is a often ignored step, but very, very important. It's really, really very essential that you know exactly what is in your asset accounts, what is in your liability accounts, and that all of those things are still valid. And if not, to remove them from your balance sheet. I personally like to create an Excel workbook and have a tab for every single account, verifying what each item in there is and why it's valid. Or if it's removed, some notes on that as well. And also, of course, keeping support as to why everything in those accounts is valid. Your auditors will thank you for that. Number five, we want to make sure that you guys remember to amortize your loans. Make sure to split out that interest from your principal payments on all of your loans, notes, so on and so forth. Number six, update your fixed assets. Now, I realize that this is a part of balance sheet reconciliations, but I highlight it because fixed assets can be a beast, and it's always important to make sure that your fixed asset schedules are updated sooner than later. Of course, your tax people will need, the information regarding your fixed assets and depreciation, so they will thank you once you have those prepared. Number seven, all right, verify your liabilities. Another one that's also balance sheet reconciliation, but I wanted to highlight that I especially recommend reconciling your payroll liability accounts. These are very quick to fall off track, and depending on what kind of software you use for your payroll. So it's always very important to make sure that those are reconciled and the liabilities in those accounts are indeed valid. Number eight, long-term debt. Well, we have long-term debt and we have current portion of long-term debt. So make sure that that's updated as of 12/31/24 for your tax accountants. They will thank you for it. Number nine, record all of your prepaids and accruals, and of course, all of your year-end journal entries. This is one where I like to highlight, if you don't already have a checklist or a list of year-end journal entries on file for your business, these are some of the things that you would want to include on there. It might always be good to, have a spreadsheet and just keep track of things that you do every year and that need to be done every year, including your prepaids and accruals. All right. Number 10, address inventory valuations and write-offs. If your company has inventory, you'll want to perform your inventory counts at 12/31 and also record any variances or differences that happen between your physical accounts and what's in your accounting software. Number 11, estimated tax payments. Now, this is an easy one to forget. I know you do it all year long, every quarter, but in January, it's one of those that's often missed, just in the January chaos. So don't forget that your Q4 2024 estimated tax payment is due on the 15th of January 2025. Number 12, WIP. If your company tracks WIP, make sure that you have your WIP schedule reports prepared as of 12/31/24 for your tax preparer or your audit people. They'll all want it. So that's very important to get together in time. Number 13, after you file for your 1099s and your W-2s, make sure you save copies of those. You'll need them for your records, but you'll also need them for your tax CPAs and auditors. Number 14, and last but not least, you will want to review your financial statements. After everything is reconciled, after all of your entries have been recorded, you will want to go through and just make sure that everything looks like it's in line. On the P&L, I like to pull a P&L by month and just go down the list and make sure that there's nothing that's out of whack, nothing that needs to be moved to a different period, so on and so forth, and then get a second set of eyes on it. If you need an additional person to review, someone who's a fractional controller or a fractional CFO, if you don't have one in your business, is always a good option. All right. That's all I have for year-end checklist. I'm going to punt it right back to Steve and Brett.
Thank you, Jackie. That year-end checklist is one of the resources that will be available to everybody. So you'll receive a follow-up email, likely from Steve, and there will be a link to include that. So if that's something that you want to use personally yourself or whoever it is in your business that is handling all of these things, make sure you pull that. So we're going to spend a little bit of time now on some Q&A. If there are any questions that you guys have, please drop those into the chat and we can start to work through those. We also just have a few, high-level points, things that typically come up that we maybe didn't touch on through those standard topics that we are going to talk through first. So I'll pass it to Jackie. And Jackie, if you can speak to some of the commonly asked questions or just things that you see pitfalls at the end of the year that business owners, bookkeepers, accountants, people tend to slip into.
Well, let's see. Well, procrastination is definitely one of them. But in thinking about questions that I most commonly get, I get a lot of questions about 1099s, obviously, but I can think of a few questions that I am very commonly asked in that particular realm. As an example, people will ask me how legal expenses are handled because now we have different forms. We have the 1099 miscellaneous and the 1099 NEC. And it depends on what kind of legal expense it is as to which form you would send. As an example, if you had a legal settlement where you had to pay an attorney to pay settlement monies, then you would send a 1099 miscellaneous for that particular amount. If you just had regular everyday legal services where somebody's helping you draft contracts or something like that, that's a 1099 NEC. So there's just some little differences there that I think it's important to pay attention. It seems like a lot of businesses at least have legal expenses. So that's a super, super common question. Another one is, do you need to send a 1099 if you paid a contractor with a credit card? And the answer is no. You don't actually. The credit card company is actually the one that's on the hook for sending that 1099 and they are exempt. But if you sent somebody cash, check, Venmo, Zelle, Bill.com checks, whatever, that would count as more of a cash payment. And if you paid a contractor with any of those methods, you wouldn't need to send a 1099. Let me just think of anything else. Those are probably the main questions that I receive.
I guess this isn't really a question, but obviously we're not covering off on absolutely everything you need to be considering at the end of the year, right? These are some of the high level points. Another one to consider, and I'm not the expert in this, many of our team members are. Jackie might have some additional information on this, but something to keep in mind for small businesses heading into 2025 is that there are going to be changes to minimum salary requirements for the year 2025, and it's a pretty significant jump. I don't have the specifics in front of me, but I know that is something that's worth looking into. If you have team members that are on salary who are kind of on the lower end of the pay scale, you may want to assess that because there's a good chance there's a requirement to bump them. We have some of our clients we work with that the jump in total salary requirement is so significant that they've adjusted the compensation plan for those individuals to make them hourly because it was simply too large of an increase in total comp for that individual. So while we don't have specifics on that for this call, there are, team members that you could talk to if that is something that's impacting your business. I think the other thing that I would say, not all of this is going to impact you as an individual. If you're listening to this live, if you're going to watch this later, but be thinking about the people around you that this could impact. You probably have other business owners or business leaders that you're connected with that this might affect their business. So be bringing it up with them if you think about it, and ensure that they're considering these types of things.
What about filing fees for 1099 W-2?
Do you mean e-filing fees? Do we mean?
Yeah, are there any fees that are associated with filing the 1099 and W-2s?
Well, now I know that if you have to file 10 forms or more, and that could be any combination of W-2s, 1099s, so on and so forth, in 2024, they are saying that if you file 10 forms or more, any combination, then you have to e-file. So most companies are going to be sending 10 W-2s/1099s, more than 10. So pretty much everyone is going to be e-filing, which is nice because you no longer need to do a 1096 if you e-file. But for fees, I would say somewhere in the neighborhood of $5 per 1099 if you're using a typical software like ZenWork Tax 1099. That's what we use here at Gray Fox. And that usually includes postage, and they stuff them and send them out. We do the e-filing. As I said, on average, somewhere in the neighborhood of $5 a 1099.
Jackie, are there any filing fees associated with the beneficial ownership interest? And okay,
that is free. Great question.
Okay, good to
And
know.
if it is asking you to pay, then you are probably using the wrong website. So there are websites out there that will charge you to do it for you, but you don't need to pay. So if you find that you need to pay, make sure that you let us know and we'll give you the website that you need to go to.
And I believe that's going to be included as part of our follow-up email from Steve. So if this is something you need to do, and I believe that there is a revenue limit on that of if you're over a certain size, you do not have to file. Jackie, correct me if I'm wrong on that, but just use that link. So the link that we're going to be sending you is the link that you should be using. And again, if you have other business owners around you in your network that need to be aware of this, just use that link, send it to them as well, so that they have the right platform that they're using to get that registered. I want to talk through next steps here, and then I'm going to pass it to Steve to kind of wrap things up for us. We just gave you a lot of information. I'm sure that you're considering this may or may not, all of it may or may not impact your business, the company that you work for, or people around you. But the first thing I want to suggest is please schedule a one-on-one consultation with our team. We have a whole team of people that this is what they love to do. They're good at it. They like to help companies. This is not customarily what business owners like to be spending their time on. If you need help, or if you just want someone to talk it through with, set up a one-on-one consultation. We'll be able to go through all of these things, but more specific to your business. And you can get some more specific questions answered. And we'd love to help in any way that we can. Number 2, please take the financial clarity assessment. This is available on our website. It will also be included in the email communication that you receive. This is a very quick 2 to 5 minute assessment that's going to give you a pulse on the financial health of your business. What this will do is it's going to help you identify if there are some weak areas with the finance and accounting function of your company. It will help you identify what those are. That way you know what to focus on in 2025. Jackie brought up a good one of having a 1099 process in place so that when you get to the end of the year, you're not scrubbing through this long list of vendors asking yourself the question, do I need to send to this one? Did we collect a W-9? And then you're trying to play catch up. So it's things like that, making sure you have the right processes in place throughout the year to make year end even easier. Number 3, download and utilize the available tools. So we talked through a couple of tools today. Please download those. If it's not under your list of responsibilities to tackle this stuff for the company you work for or own, please get it into the hands of whoever does so that they have resources to use. And lastly, please contact your CPA right away. Do it today. Do it as soon as you get off this call. Send an email to them. Now is the time of year, your window is closing for when you have the opportunity to take advantage of certain credits, deductions, cash flow changes. There are things that you can be doing between now and December 31st. There are also things that you can do at the beginning of the year that impact 2024 taxes, but your CPA is the one that's going to answer those. And as much as we want our CPA to proactively be reaching out about those opportunities, they aren't. They have thousands of companies that they're working with. They can't stay up to date on every single one of them. It's on you guys to reach out and ask the question, what can I be doing before the end of the year to save on taxes this year? Credits to take advantage of. So send the email, get in front of them. If you're the one raising your hand now, you're the one who's going to get the attention. If you wait until January, February, they're going to be working through thousands of individual and business tax returns, and their response time will be considerably slower. So reach out and contact your CPA. That's all I have for next steps. I'm going to pass it back to Steve to wrap things up for us.
Thanks, Brett. We are at time here, so we hope that you found value in today's content. We want you to know that you don't need to go it alone. We've got a team of fractional team members, like we've called out, that can not only assist and advise, but frankly, they can do a lot of the heavy lifting for you. So we'll reach out as a follow-up. Looking forward to reconnecting with you and continuing these conversations one-on-one. Thank you so much, and have a great rest of your day.